in today's discussion, we will be discussing chapter number 12, chapter number 13, chapter number 14, and chapter number 15. So there are four questions in today's session, which are very good questions picked up from RTP. Yeah. So chapter number 12 is on audit under fiscal laws, which is essentially your income tax, your tax audit. Okay, a tax audit under section 44AB of the Income Tax Act. Then you have chapter number 13, which is audit of public sector undertakings. Then chapter number 14 is liabilities of the auditor, and chapter number 15 is internal audit, management, and operational audit. Right. So these are the four chapters that we are going to, for which we are going to see the questions. Okay. So just a quick overview on all these four questions. Right, quickly to discuss on what these four questions are all about. The first one, audit under fiscal law. So, earlier you had two subdivisions. One is income tax law, then other one is GST law. Now, since there was a GST law is no longer there because that entire provisions was changed. Okay, now there is no GSTR 9C. Okay, it's all on self certification. There's no audit required. Okay, under GST law. So therefore, that entire part is deleted. Now you only have the audit under income tax law. Income tax law, your 44AB provisions, your 44AD provisions, then your entire tax audit report, which is Form 3CD, and there are some 40 clauses, 40 odd clauses which are applicable. Okay, there are some changes in this particular chapter. So this is essentially what this chapter is. So definitely one question will come from this particular chapter, no doubt. One question will come from this area. Generally a 4 to 5 mark question comes. There could also be an MCQ in your 30 marks of MCQ. You can also expect one question from this area. Okay, so you can expect around 4 to 6 marks from audit under fiscal laws. It's a very important chapter, and I'm sure most of you in pursuance of doing your articleship would have done tax audit, right? So this is essentially what you have done in your articleship and what you're going to study, right? And what you've already studied. So this is not something very new. So I would recommend everyone to go through this chapter. It's a very easy chapter from that angle. If you've already done on tax audit this thing, so it becomes all the more easier. Right, the next is audit of PSU, public sector undertakings. This is basically on how you will audit, what are the things that you will take into account. You have CAG provisions over here. Okay, sir, other important terminologies are used in this area. Audit of public sector undertaking. Again, a 4 mark question is generally asked from this particular area. You learn about the different types of PSU audits. Okay, in chapter number 13 of your inter, you had something called government audit. So this is basically an extension of that government audit. What kind of audit report? What is propriety audit? What is comprehensive audit? What is performance audit? What is compliance audit? Okay, what are different aspects of a PSU audit? All that is covered under this particular chapter. That is audit of PSU. The next one is again 4 marks. Definitely one question will come. Next one is liabilities of the auditor. This is a very peculiar chapter. This will talk about what are the liabilities of the auditor as far as any law is concerned. Right. So it talks about how the law has evolved. Right. How the law has evolved as far as liability of the auditor. Tomorrow I'm issuing any report, and a third party is relying on that report. Okay, and if the report is misleading, which is later found out, whether the third party has a right to sue against the auditor, and whether the auditor is required to make good the losses. That is the subject matter of discussion in this liability of the auditor. What are the different laws that talk about the liability of the auditor? For example, the company law, the income tax law, what is the civil liability, what is the criminal liability? All that is discussed. One question comes from this area. Okay, sometimes no question come from this area. Okay, either get a question or either don't get any question from there. This question can come from here, question may not come from here. It's a very frequently asked MCQ type of questions. Okay, theory questions generally don't come from this chapter. Okay, that is on liabilities of the auditor. Internal audit, management audit, and operational audit. So that's chapter number 15 for you. Internal audit is what are the types of internal audit, when will you do an internal audit. So basically the chapter itself is divided into three: internal audit, management audit, and operational audit. There are three types of audits. Okay, so what is an internal audit, what is a management audit, and what is an operational audit? Okay, so there's a difference between the three. How is each carried out? What are the different audit reports that you discuss? A detailed discussion is done on these three areas. One question comes from this chapter also. 4 to 6 marks. One question generally comes from this chapter. Yes. Any doubts? Shall we proceed? To the questions now?
Yes.
Okay. Now, question number one. I'm hoping that all of you have seen the recordings. I'm hoping all of you have seen the recordings, and then you're attending this session. Okay. If you haven't seen the recordings, then it is difficult to answer the questions that are given in this. Now, you've already seen your regular class recordings, and now you are kind of going through. This is just a revision for you. This is just a session where you can see what kind of questions and how questions are being framed. Okay, if you're directly seeing this, then it will become very difficult for you to kind of understand how the questions will come. So the prerequisite to even attending this class is to refer your regular recordings, as part of your as part of your syllabus, which are there in your syllabus. Okay, so the first one, question number one. So with this, we will start today's class. Okay, UT and Company is a chartered accountant firm that provides consultancy services. Recently, it got queries from different clients with respect to applicability of tax audit provisions to their business. Okay, so now it is getting a query with respect to applicability of tax audit provisions to the business. The question is towards the audit and the fiscal law. We all know that, right? In response to such queries, UT and ask from them details such as turnover, total receipts, and total payments made during the year. Because to determine the tax audit applicability criteria, you need to know what is the turnover, you need to know what is the total receipts and total payments. Now that's a new provision which was inserted lately, right? What is the percentage of the receipt? What is the percentage of the cash receipt? If it is more than 5%, less than 5%, okay, so all that is required. Okay, during the year respective, along with the mode of receipt of payment, whether filing of return under normal tax provision or presumptive tax provision such as 44 AD or 44 AE, etc. So if you are opting under 44 AD, then 44 AB tax audit will not apply. Yes or no? So you will have to have a thorough understanding of, even write this question, you have to have a thorough understanding of section 44 AB, which is the tax audit, as to when a tax audit is applicable. You have to have a thorough understanding as to when it would be applicable. You have to have a thorough understanding of 44 AE as to when your 44 AE would become applicable. Clear? So only when all of this is applicable, you will be in a position to understand. Now going back, no going further. So now this is the question. Now this is a question. So in the trailing mail, UT and Company got the aforesaid details from the client, which it classified into following categories for ease of framing an opinion as follows. So this is the information or the data which is there in the question, right? The turnover in crores for the first client 1, 4.5 crores. Percentage of cash receipt and to total receipt is 5%. Percentage of cash payments to total payment is 5%. What is the meaning of cash receipt? So I have total receipt of 100 rupees. Out of the 100 rupees, 5 rupees I have received in cash. So that is 5%, right? So again, payment to, why this is required? Because if your cash receipts and cash payments go more than 5%, then a tax audit, then your tax audit limit, your tax audit turnover limit will become up to only 1 crore, right? That is why this is important, right? And remarks, has been filing return as per the regular provisions of the Income Tax Act. Similarly, point number two. Okay, let's go point by point. Let's go for the first one. First question. Turnover is 4.5 crores. Percentage of cash is 5 crores. Percentage of cash payment is 5%. Has been filing return as per the regular provisions of the Income Tax Act. Now, the question is what, sir? We have to advise them on the applicability of the tax provisions, right? Or tax audit provisions, whether audit will be applicable or not. So here the question is, on behalf of UT and Company, please provide your opinion along with reasons as a consultant in case of aforesaid clients that whether tax audit is applicable to them or not. So in the first scenario, tell me whether tax audit would become applicable or not applicable. Yes, I would like to hear from you. Yes, tax audit will become applicable or not applicable. Yes. Tell me, anyone, is tax audit applicable or not applicable? You can even comment, in your chat box you can write. Or so it's very important for you to know the provisions before even going, before even attending. So that's why I'm asking. This is a very simple question. It's not a very complicated one. So whether tax audit, I'm looking at the first one. 4.5 crore the turnover. Cash receipts is 5%. Cash payment is 5%. Has been filing return as per the regular provisions of the income tax law. Yes.
Okay, so I'll answer since I've not got any answer. So the answer is tax audit will not be applicable because the turnover, as the turnover is up to 5 crores, cash receipts and cash payments are up to 5% of the total receipts and total payments respectively, and has been filing as per the regular provisions of the Income Tax Act. So tax audit is not applicable, right? So if my turnover, no, actually not 5 crores has become 10 crores, okay, it's amended, right? Again, okay, the income tax law has again been amended. So if my total cash receipts and cash payments are 5% or up to 5%, okay, then in that scenario, my tax audit threshold will go up to 5 crores. It was earlier 5 crores, now it has been amended to 10 crores. So in this scenario, therefore, tax audit is not applicable. Okay, suppose if the turnover is 15 crores, then there is no doubt about it. Tax audit is applicable. Okay, say my cash receipt is say 10%, then the turnover becomes 1 crore. If the cash receipts and cash payments is 10%, is more than 5%, okay, then the turnover threshold applicable will be 1 crore. Then tax audit will become applicable, right? If the cash receipt and cash payment is up to 5%, then the applicable threshold will be up to 10 crores. So in this case, tax audit is not applicable since the cash receipt and cash payments are up to 5%. Second scenario, okay, my turnover is 1.8 crores. My percentage of cash receipts is 7%, and my percentage of cash payments is 4%. Has declared business income as per the presumptive taxation under section 44AD of the Income Tax Act. So we have to understand what is 44AD, right? 44AD is the presumptive taxation scheme, wherein what is the maximum this thing? It is 2 crores. If your turnover is up to 2 crores, then you can apply for 44AD. The moment you apply for 44AD, you tax audit will become non-mandatory. Tax audit is not required. Tax audit is not required if you are applying for the provisions of section 44AD. So in this case, since you are applying the provisions of 44AD, a percentage of cash within percent of cash payment is not mandatory. Therefore, the answer is no. Even though turnover exceeds 1% and cash receipts are greater than 5% of total receipt, but as business income has been declared as per the presumptive taxation under 44AD of the Income Tax Act, tax audit is not applicable. So once you declare 44AD, go as per the 44AD, tax audit does not become applicable. But for 44AD to become applicable to you, the turnover cannot cross more than 2 crores. That is essential. Now, next one is third criteria. My turnover is 85 lakhs, which is 0.85 crores. My cash receipt is 6%. My cash payment is 4%. Okay, so looking at this, can I apply for 44AD? Yes, I can apply. Let's see what the remarks are. Has declared business income as per the presumptive taxation under section 44AD of the Income Tax Act. Amazing. During the last two previous year, but during the current previous year has declared income lower than as per section 44AD, and total income is less than the basic exemption limit. Sir, what does this mean? So for example, now what does 44AD tell us? 44AD, section 44AD of the Income Tax Act says my turnover, any eligible assessee and into eligible business can opt for 44AD. Now, what does 44? What is eligible assessee? Eligible assessee is an assessee whose turnover is not crossing more than 2 crores. Clear? And he's engaged in the business of profession. Business now, business should not be agency business. The nature of income should not be commission. It should not be an LLP or a company, right? In this scenario, 44AD is applicable. Now, 44AD, you have to apply a flat rate. So my turnover is 85 lakhs. On the 85 lakhs, I have to apply a flat rate of 6% if all the receipts are in cash, in other than cash, and if it is not other than cash, then it is 8%. So you have to apply one flat rate on the income. That is what 44AD says. So suppose in this example, my 85 lakhs, on 85 lakhs, I'm supposed to apply, if I opt for 44AD, I'm supposed to apply for 85 lakhs into 6%. I have to show it as a taxable income, right? On that taxable income, I have to pay tax. That's all. That is if I'm doing that, then there is no requirement of tax audit. However, in this scenario, my actual income from the business when I'm maintaining the books of account is actually lower than 85 lakhs into 6%. Is lower than that. So I will obviously, as a prudent person, I will be showing that actual income and not the income derived under the presumptive scheme, right? So in that case, so that's what it's saying. During the last two previous years, but during the current previous year, has declared income lower than as per section 44. So assume 85 85, let's say for example 85 lakhs into, if I do 6%, okay, so my total income will be around 51,000, right? 51,000 will be the presumptive income, but my actual income that I am showing is only 30,000. Now, since I am showing a lower income of 30,000 rupees, 44AD I'm not applying. Therefore, in normal parlance, 44AD, since I am not applying, I'm declaring a lower income, tax audit becomes mandatory. Now, the question is that there is one more provision under the same section saying that if that lower income is less than the basic exemption limit, okay, less than the under the income tax law, then tax audit is still not mandatory. So in our scenario, since we are having 85 crores and 85 lakhs, and the into 6% also, if you do it 51,000, okay, and if say assuming it is declaring a lower income and that lower income is less than the basic exemption limit, then still tax audit is not mandatory. So even though I am not applying 44AD, okay, I am declaring a lower income other than 44AD, still, since my total income, lower income that I'm declaring is less than the basic exemption limit, for tax audit will not be applicable. So that is what is this. Even though the business income as per presumptive taxation under section 44AD of the Income Tax Act has been declared during the last 2 previous years, but has not been declared during the current previous year, but as the total income is less than the basic exemption limit, so tax audit is not mandatory. Now, the last point number 4, question number 4 is 3.2 crores turnover above this thing. 8% is the cash receipt, 6% is the cash payment. Has declared income as per the presumptive taxation under section 44AE of the Income Tax Act. Now, 44AD is the one section. 44AE is for special class of people. Basically, it is for those people who are engaged in the business of plying and hiring of and transportation. It is freight forwarders, right? It's for them. 44AE is the presumptive presumptive scheme for those kind of SCs which are engaged in those kind of business. Okay. Now here during the last has declared income under 44AE during last 4 previous years, but during the current previous year has declared income lower than as per section 44AE, and total income is less than the basic exemption limit. Now, same question as 44 as question number 3, actually same question only, but here only difference is there he opted for 44AD, which is a normal presumptive section. Here it is opting for 44AE, which is a special presumptive section. Now this presumptive section says that if you are opting for if you're not opting for presumptive income, and if you're declaring an income lower than the presumptive income, you will have to do mandatory tax audit under 44AB of the Income Tax Act. The condition of income being less than the basic exemption limit is not present under section 44AE. Therefore, in this scenario, tax audit becomes mandatory. So that is what is the answer. Has been declaring total income as per presumptive taxation under 44AE during last 4 previous years, but during current previous year has declared income lower than as per section 44AE. So tax audit will become applicable because the total income less than the basic exemption limit, that condition is not there in section 44AE. It is only there in section 44AD. Okay, so if you're opting for 44AD, you have to check whether the income is less than the basic exemption limit. If that is the case, then tax audit is not mandatory. But if you're opting for 44AE, then you have to check, then this condition of basic exemption limit is not at all applicable. Tax audit becomes automatically mandatory if the assessee is not declaring income as per the presumptive taxation scheme. Clear? So this is on on the applicability of tax audit. Very interesting question. Yes, any doubts before I proceed? Any doubts? Can I proceed further? What is last 4 years declared income? Okay, so that's a question which has been given. So the last 4 years he has been declaring income under the 44A. When he filed his returns for the last 4 years, he has been declaring under section 44A of the Income Tax Act. Okay, this year he is not declaring as per 44A. He has been declaring an income which is lower than 44A, and therefore tax audit becomes mandatory. That's the provision. Are you able to understand? Okay. Now, the next one, question number 2. The controller, thank you. Okay, great. The Comptroller and Auditor General of India has appointed a chartered accountant firm to conduct the comprehensive audit of Metro Company Limited. Okay, a listed government company. So immediately when this kind of questions are asked, we need to know that this is basically a audit under PSU, right? When you talk about listed government company or something like that, it will generally be an audit under PSU, okay, which is handling the metro project of the metropolitan city for the period ending 31st March 2020. Okay, again I repeat, the CAG has appointed a chartered accounting firm to conduct the comprehensive audit of Metro Company Limited, who is handling the metro project of a metropolitan city for the period 31st March 2020. The work to be conducted under Project A, handled by Metro Company Limited, was of laying down railway lines of 124 kilometers. The chartered accountant firm reviewed the internal audit report and observed the shortcoming reported about the performance of Project A regarding the understatement of the current liabilities and capital work in progress by 84.68 crores. Right. So explain some of the matters to be undertaken by the chartered accountant firm while conducting the comprehensive audit of Metro Company Limited. So this is a pure question from, you know, from PSU. Okay, it's from chapter number 13 PSU. So if you only and only if you have studied this chapter, this will become an easy question, because otherwise we will not know what this comprehensive audit means. So what is the comprehensive audit? First, let me explain that, right? So comprehensive audit, the CAG does not really cover again the field which has already been covered. He conducts an appraisal or an efficiency come performance audit. He sees that the undertaking that fulfill the objectives for which they have been established, whether value for money spent has been obtained, whether targets have been achieved, etc. He locates the areas of weakness, including a review of the decisions taken by the management and a comprehensive appraisal of the performance of the undertaking. So it is not a so the word comprehensive generally means, a complete detailed study. It is not so. It is basically it does it appraisal or an efficiency come performance audit. Okay, it's an appraisal or an efficiency come performance audit which is being carried out, right? So here in this scenario, CAG is appointed a chartered accountant firm. The chartered accountant firm, conducts the comprehensive audit of Metro Company Limited, which is handling the metro project of the metropolitan city. The work to be conducted under Project A, handled by Metro Company Limited, was of laying down 124-kilometer railway line, right? But there are some shortcomings which have been already found out. Okay, so this is doing a re-audit. Okay, already an audit has been conducted. I am just doing another performance audit. Basically, I am not doing a financial statement audit and finance. No, I'm not doing a statutory audit. I am seeing whether this project A, whether this project, what was the objective and whether the objective has been fulfilled. The budgets that were given, okay, the money that has been spent, whether it is right, whether in that essence, whether it is right, or could it have been spent better. Basically, it's a propriety audit, right? So that is what needs to be checked. Okay, so now going back. So now the answer. A CA firm has been appointed to conduct a comprehensive audit of Metro Company Limited, which is a listed government company handling the metro project. CA firm has observed the shortcomings as stated in the internal audit report regarding the understatement of current liabilities and CWIP by 84.68 crore. Now, what is the question, sir? Question is very clear. Explain some of the matters to be undertaken by the CA firm, okay, while conducting the comprehensive audit of Metro Company Limited. So again, we have to understand what is the meaning of comprehensive audit. We need to know what a comprehensive audit is, and then only we'll be able to answer this question. Basically, since it's a project, we'll see whether the amount spent is correct, the decisions taken by the authority, whether they are right. Okay, now to understand about what is this understatement of current liabilities and CWIP. So those are the points that will have to be included. Okay, now how does the overall cost of the project compare with the approved plan cost? As I explained, was there any substantial increase, and if so, what are these, and whether these evidence of extravagance or unnecessary expenditure? So whether there is any unnecessary expenditure incurred. Now this is not generally which you do in a financial audit. In a financial audit, we will see whether the expenditure is in line with the accounting standard, the expenditure is approved, the expenditure are properly disclosed, and that's it. Whether it is frugal expenditure, it is for the business, not for the business, it's not something the auditor has to comment upon. Are you guys able to understand? He is not doing an efficacy audit, but in a government scenario, he is doing a efficacy audit, whether it is required or not required. Have the accepted production or operational output been achieved? Has there been any underutilization of installed capacity or shortfall in performance? And if so, who has caused it and what has caused it? Has the planned rate of return been achieved? Right? Are the systems of project formulation execution sound? Are there any inadequacies? What has been the effect on gestation period and capital cost? Are cost control measures adequate, and are there any efficiencies, wastages, and raw materials consumption, etc.? Are the purchase policies adequate? Does the enterprise have research and development programs? What has been the process in adopting new process technologies, improving profits and reducing costs through technological process? If the enterprise has an adequate system of repair and maintenance, are procedures effective and economical? Is there any poor or insufficient or ineffective project planning? Right. So this is the answer. There are 11 points. If you're able to write at least 5 to 6 points, that is also more than enough. We don't have to write so many points. There are 5 to 6 because this is a question for 5 marks. It's ours in Jan 2021. Okay, it's a very nice question. We have to, you have, so again, sir, how do I remember all this? See, this is a matter of understanding. Okay, so you will have to kind of put yourself in the shoes of the audit firm, and you have to think and you have to write. There is no question, sir. First, you need to know what is comprehensive audit. Only then you'll be able to write the answer. Okay, so comprehensive audit basically means an efficacy audit. Whether the cost incurred by the company, by the Metro Company Limited, by this thing, whether it is in line, whether it is required or is it unnecessary expenditure, whether there are any cost control measures, whether the project financing measures are properly done, whether there are proper controls, cost control measures are there, whether a required output that was required to be achieved, whether that has been achieved. If it has not been achieved, what are the reasons for it, right? What is the planned rate of return? Okay, are there any cost control measures? Is there any wastage of raw materials? Okay, repair and maintenance adequate system is there or not? Okay, purchase policy. So all these are basically inventory. All they have led to piling up of inventory, resulting in redundancy and stores and spares. Okay, purchase policy is there. So only when the materials, are coming down, there's an economic order quantity. Only then purchase is required. Or haphazardly, people are purchasing left, right, and center. There's an inventory, but their inventory is not being used. Right. So those are the things as an auditor, as since you have done articleship, okay, I'm hoping you will have to kind of put it on your own. So you have to put yourself in the shoes of the auditor, and you'll have to write. Okay, write more in terms of cost control, write more in terms of frugal expenditure, write more in terms of how much it has, what is the performance, how much performance has been achieved, what is the output that has been taken, what has not been achieved. That is what has to be written in this thing. Are procedures effective? Write general questions and general statements, and you'll be getting. Okay, it's a very general question for which they require a very general answer. Okay, now any doubts? Okay, there are two. Any doubts in this? Can I proceed forward? Okay, question number 3. Kshitij G and group of persons subscribe to the shares of JNN Limited. JNN Limited had issued a prospectus for issuance of shares against which these persons had subscribed the share. It was later found that some information as included in the prospectus was misleading. These persons filed a case against these persons means the shareholders, right? These persons filed a case against the company covering all the parties who are responsible for the prospectus on the ground that the information contained in this prospectus was misleading, and they suffered a loss by relying on that information. The company consulted this matter with its legal consultant in respect of the course of action to be taken, and also consulted that if the outcome of the case goes against the company, then goes against the company, then all the parties may be held liable. And what could be the other consequences? I repeat, the company consulted this matter the company consulted this matter with its legal consultant in respect of the course of action to be taken, and also consulted if the outcome of the case goes against the company, then all parties may be held liable, and what could be the other consequences. Okay, so basically there is a prospectus. A prospectus has some misleading information. Basis that misleading information, company shareholders have invested shares in the company. Now shareholders are having invested. Once they found out the statements are misleading, they have filed a suit against the company, saying that because of your statements, which are misleading in itself, I have invested. Now I'm suffering losses. Okay. Now the second part of the question. The prospectus also included the auditor's report, who had also given his clearance. Some of the expert was also involved in respect of the information on which the litigation was filed. Some of the experts were also involved in respect of the information on which the litigation was filed. Subsequently, it was proved that the contention of Kshitij and those persons was correct. It was held that directors, promoters, and the company and the experts involved would be liable to pay the compensation to all these persons who had sustained losses or any damage. The auditors of the company were also asked to make good the loss, but they refused this argument that is limited to directors, promoters, and experts. So basically, this question is from chapter number 14, liabilities of the auditor. So as I discussed now, this is a very classic case study question which is asked. Okay, it's a true or false question. Okay, where they've explained, they've given the facts of the case, and they're asking whether the auditors are liable or they are not liable. Again, I repeat the question. Okay, Shechitji and a group of companies subscribed to shares of JNN. JNN issued a prospectus for issuance of shares against which the person subscribed these shares. It was later found that some information has included a prospectus was misleading. These persons filed a case against the company covering all the parties who were responsible for the prospectus on the ground that information contained the prospectus was misleading, and they suffered losses by relying on that information. Facts are very clear. The company consulted this matter with its legal consultant in respect of the course of action to be taken, and also consulted if the outcome of the case goes against the company, then all the parties may be held liable, and what would be the other consequences. Okay, the prospectus included the auditor's report, who had also given his clearance. Some of the experts were also involved in respect of the information on which the litigation was filed. Subsequently, it was proved that Kshitij's contention was correct. It held that directors, promoters, and experts would be liable to pay the compensation to all these persons who had sustained losses or damage. Now the question is, the auditors are saying, no, it is only restricted to directors and promoters, and it is not restricted to me. I am not required to make good the losses. And they refused to pay the losses. Right? So now the question is, in this context, please suggest which of the following statement is correct. It's a true or false. It's a MCQ, right? Which of the following is correct? The argument of the auditor is valid. As per the final outcome of the litigation, the auditors were not held liable. However, on moral grounds, the auditors should contribute towards the losses suffered by any person. Point number 2, that is option number B, the argument of the auditor is valid since the final outcome of the litigation did not hold them liable. They cannot be asked to contribute towards the losses suffered by any person. Argument option number C, the argument of the auditors is not valid. The final outcome of the litigation covers the expert, and hence the auditors also get covered to contribute towards the losses suffered by these persons. Option number 4, the outcome of the litigation seems to be completely wrong. This is a completely different option, right? The directors and experts are held liable, but along with that, the statutory auditors, internal auditors, tax auditors, company secretary, tax consultants, and the legal rights should also have been held liable, for the promoters cannot be held liable in such matters. So these are the 4 options. Just read the options and tell me, what do you think is the right option? If this question comes in the examination, what do you think will you give? Option A, B, C, or D? Yes, quickly. It's a very simple question, and it's just an MCQ question. You don't have to, don't have to do much. So tell me, what would be the answer? Yes. Yes, anyone? Option number D. Karthik is saying option number D. Outcome of the litigation seems to be completely wrong. The director is an expert, so outcome is what? That the company is responsible, the directors are responsible, everyone is responsible, right? The auditors subsequently to come to the contention of Kshitij and those persons are correct. The sense that directors, promoters, and experts involved will be liable to pay compensation to all these persons who have sustained losses or any damage. So the outcome itself is wrong. Option C. Santosh is saying option C. Okay. So the answer is option number D is definitely not the correct option, Karthik. It is actually, the outcome is actually correct. Since prospectus, you have to give the correct information. If you don't give the correct information, and if the nexus between the shareholders relying on that information being misleading in nature and they making the losses because of that, if there is a proper nexus, then the company along with all the experts will be held liable. So that in the sense that the litigation is incorrect, that option is absolutely wrong, right? Option number C is the right option. The argument of the auditor is not valid. The final outcome of the litigation covers the expert, and then the auditor also gets covered to contribute towards the losses suffered by the expert. The expert, I mean, when I say expert, the auditor also forms part of the expert team, and since he has given a clearance clearly, we will also need to make good the losses. So that is the answer, right? So, I mean, again, as I said, you have to study chapter number 14 for you to even answer these kind of questions. Otherwise, all these questions will just go above your head. Okay. Now, the last question is a very direct question. Right? Any question? Any doubts on the previous question? Any doubts? Chapter number, question number 3. Any doubts? Can I proceed? Any doubts on this thing before I start? The last question is very simple. Clear. Okay. Now, question number 4. Write short notes on summary written reports. So this is the question from chapter number 15, which is your management audit, internal audit, and operational audit. Okay, there's a small, I mean, under the management audit, this part comes summary written report. Okay, so basically types of management: there's an oral report, there's a summary written report, there is a long report, so on and so forth, right? So what is the summary written report? Basically, summary written report is a report for higher level executives. So for example, you have a big audit report that you prepare, right? Now you cannot go to Mukesh Ambani and give him a 16-pager report. Okay, you have to tell him in a very crisp manner as to what the report in essence says, what are the key observations and key takeaways in the report, right? You cannot go and present him a 16-pager report, because he will not have the time, right? So for the higher level executives, for the top management of the company, there is something called a summary written report, which is basically an executive summary which is prepared, which summarizes all types of reports. Okay, all the reports, there are some 10 reports. It will summarize all the 10 reports in just 1 or 2 pages, and it will say what does each report kind of says. What does each report, what is the key observation of each report? That is basically a summary written report. It is generally for presentation to the top management of the company. Clear? So this is what the answer is. It's a direct answer. These summary reports are also referred to as flash reports. In a number of companies, the practice has developed of issuing an annual report summarizing the various individual reports issued and describing the range of their content. Basically, we'll have a summary. These are the reports that are issued, and these are the key takeaways. That's all. These summary reports, in some cases, are primarily for audit committees or board of directors, but in other cases for higher level management. They are especially useful to top level managers who do not actively review the individual report, but they want to know what is happening. So they don't have the time for so much. So they just give them this report, they'll quickly read it. Any discussion that you have to make, you make it, and that's all. Matter is over. They are also useful to general auditor in seeing his total reporting effort with more perspective and on an integrated basis. So with all the reports, the auditor's report also gets summarized in this summary written report, right? So this is question number 4. So with this, today's chapter is concluded. Okay, today's questions and today's session is concluded. Any doubts with respect to any of the chapters? Okay, you have to refer your regular recordings. Otherwise, these questions will go completely above your head. I see a lot of people not answering your this thing. High time that you guys go through the regular recordings for you to even answer these kind of questions. Otherwise, it becomes very, very difficult, right? So yes, that is it for today's session.